Following Nvidia's earnings overnight, we saw the Nasdaq futures rally quite aggressively, and it has extended those gains. But it is now testing a key area of resistance here at around 25,200, which was previously a key level of resistance and support. And we are testing the backside of this broken bullish trend line as well. The index is inside this short-term bearish channel. So technically, the recovery that we've seen is going against the short-term trend. So be mindful that it could turn lower once again, given that risk sentiment remains downbeat, as has been the case throughout this week, with cryptocurrencies also falling and Japanese yen taking a beating as well. So it's essential that the Nasdaq holds support around the 24,875 level, this level being the high from the last couple of days. If it were to go below this level again, then that could pave the way for fresh technical selling below it. Keep an eye on Nvidia shares as well. They were up around 5% at the time of recording, but if the Nvidia shares start to come down again, that could put pressure on the wider equity markets, given how important the stock has become in the financial markets. The US dollar has continued to push higher against the Japanese yen, and this is despite the fact that we had a mixed jobs report for September. As you may recall, the headline figure came in higher than expected, but the unemployment rate also rose more than expected, and that put pressure on the dollar against other currencies, but such as the weakness in the Japanese yen, that the dollar yen has just simply continued to push higher and is testing the 158 handle, approaching the January high of 158.88, which is now not very far away from here. And we are getting into areas where the Japanese authorities might step in and intervene. And one of those levels could be around 160 on the dollar yen. So watch out for potential intervention should we get there. So the drop in the Japanese yen is quite staggering, because on the one hand you have the government introducing fiscal measures to boost the economy, while on the other they are preventing the Bank of Japan from tightening policy when inflation is quite high in the country and debt levels are very high compared to GDP. Anyway, keep an eye on the Japanese yen, because the dollar yen is approaching intervention levels. So we could potentially see some intervention from Japanese authorities to defend the currency. The UK budget is happening next week, and ahead of it, we've seen some pressure on UK assets with bond prices, the pound and the FTSE all weakening in recent days. The cable has bounced back today on the back of the US jobs report, but it's now testing this key area of resistance. Previously, this area was a double bottom low from earlier this year before we broke below it in late October. And since then, the cable has kind of oscillated around this area without making any significant movement in either direction. But the lower highs suggest that the path of least resistance is to the downside, at least in the short term anyway. So we could well see some selling pressure come back into the market as the exchange rate is testing this area of resistance between 131 to 131.40 area. Keep an eye on that level, because it's very important. If that area were to give way and we break above the trend line here, that could then pave the way for a short squeeze rally towards 132.50, where we have a price support converging. On the other hand, if the selling pressure continues, then 130 could be the next downside target, which is a key psychologically important level. Given the ongoing uncertainty over the UK budget, I think the risks are tilted to the downside for the pound, and as a result of that, I'm expecting the cable to potentially resume lower from around here and head down to 130 and probe liquidity below that level. And let's see if it will get there, but for the time being, keep an eye on this area of resistance. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.